So today our agenda, the part number 11 of this tax learning series. So first point we are mentioning the computation of corporate tax. We will learn the computation, but before that we will go to the next corporate tax return overview, because why we do the overall framework sharing with you before starting the computation of corporate tax, because this is our main topic for today, the learning point of view. But before starting the topic, we have to understand why we gonna do this and why we need this and where we require this information or where we require this learning and what are the supporting component from the accounting and from the financial or from the other team members that we may require. So let's start with the first. We will start with the from the return point of view. Corporate tax return, this will be, we're gonna start and we see the first topic is the accounting schedule statement of profit and loss. Again, this is the only for information purpose and understanding purpose. And what are the information is required. The second is the comprehensive income, that is also again the same, and statement of financial position. After that, we will come to the computation of corporate tax return, but that also will see the return part also, what are the adjustment. So here, if we see in this, I took this screenshot, this timeline, the return preparation progress timeline, we can say, from the FTA portal, the return portal. So this information, 1, 2, 3, we are not going to discuss. We're going to start from the 4, accounting schedule. Okay, the such thing we will discuss later on once we reach on this topic. But this is our topic today for the discussion and understanding. And the 4 plus 5. Now we're going to see the return. What are the information they require under the accounting schedules? What are the information we have to fill up over there? Accounting schedule statement of profit and loss. So the first from the reporting team, normally we have to understand there is the accounting team, there is a reporting team, and there is a tax team. So there will be 3 different roles. 3 different roles in each organization, but maybe small organization, one person is doing all this activity. But just for our understanding, at a time, he has to prepare the financial from the tax point of view. All the person have to know the tax regulation. So the first, in each accounting team, there will be a bookkeeper, then accountant, then there will be a reporting team. So this financial are the audited financial. Normally we familiar. This financial are the financial statement prepared by internal team also, because in certain circumstance the company do not need to prepare the audited report, because it's optional. We already have the discussion on this topic. So we are saying the reporting team will prepare the financial statement. The financial statement component we already discussed is a 5, but it is total is a 6. But mostly people are combining the profit and loss and other comprehensive income. So the first point in the financial statement, we are mostly familiar, profit and loss, operating expenses. We are not going to discuss the IFRS. We are just shown this information we have to put in the financial statement. So now we're going to move to the next slide. What are the additional information? That is a salaries, wages, depreciation. We all familiar, we've seen in our books of accounts, interest. So all this part we will discuss in detail also, where the relevant topic will be covered. Interest income, interest expenditure. Again, in corporate tax, the word is used the net interest, which means interest income and interest expense. We have to calculate based on that. So that is 30% interest capping rule on the net interest. Any other comprehensive topic we will see in that. Then the gain on disposal of asset and loss on disposal of asset, gain or loss on disposal of asset. I shared today when the YouTube link or YouTube information for this these element, gain on disposal, loss on disposal, these element, then unrealized gain and losses, that such topic are relevant to the same part. But detail we will see later on. Hope you guys seen that session that previously I uploaded on YouTube also. Let's move to the next part. Again, here maybe some people is saying why we are going to discuss this. First, we have to understand what are the information from financial we will put on the FTA portal in the corporate tax return. So this is the understanding point of view. We are go through overview of this part. Foreign exchange gain loss here. We have the understanding because normally we make the foreign exchange gain loss only one ledger or one chart of account in our books of account, but FTA need the separate one. He's saying how much the gain and how much loss. You may continue in the same practice, and but at the end you have to make the separate pull out the ledger and take how much the total is the gain and total is loss, because FTA need this information on both sides. But the on other side, if you make the convenient from your work life and improve your importing reporting, because improvisation will remain there in our accounting. Earlier, we are focusing only from the accounting perspective. That maybe fits so far from accounting perspective. But now, due to the tax point of view, we need such information. If we make our chart of account in a way that gives the same information that will align with the return, that will be much helpful for you guys. Again, all these points, why is important? Because such chart of account must be appearing separately in your books of accounts. This point, why we discussing? Because if is appearing in your chart of account in the same line item, that will appear in the financial statement also. From this financial statement, what we are going to discuss here from the system, from the whatever the accounting tool you are using, if that accounting tool or the application or ERP will give you in the same way the information that will helpful for the return preparation and reporting purpose also. The finance penalty, because such things have some taxation regulation, maybe it's allowed, maybe disallowed. And the donation also, there is some donation is allowed, exempt from the corporate tax. Allowed and disallowed means some may be accepted as a expense and some may be not accepted as expense. Again, the client entertainment, we know that previously we discussed the 50% is allowed only. And let's move to the next part of that, because this is just for overview purpose. We already seen the other operating income, dividend received. We already seen net profit and loss. This is the actual net profit and loss before interest and expense. If we because here interest already deducted, but our starting point for the calculation of the accounting corporate tax is the EBITDA, interest profit before interest and tax. And let's move to the next slide and see the statement of comprehensive income. This is the point where I referred. One session is uploaded on the YouTube, and you go and see this part. We have to understand a statement of other comprehensive income, because such things have the impact on the audit tax preparation. Why the impact is there? Because once you go and see the that session, it have comprehensive understanding with the example. If you already go through that, now you can understand why I was referring. Such thing is important because it's appearing under statement of comprehensive income. It's not adjusted in the profit that we started our calculation. But shall we do the adjustment for these items, or we will not do the adjustment of these items? This is the point over there. Now we will not start our tax computation from the TCI, total comprehensive income. We are starting our calculation for the tax purpose profit, from the profit, not from the TCI. That is the second line item. This is the last item in the financial statement. Let's move to the next. Statement of financial position. Mostly we are familiar with the name of balance sheet. Hope guys you are understanding what I'm sharing the overall view of this financial statement. Would you please share the feedback on the message? I'm audible and visible and things are moving fine. Please be with me quickly, response on that. Let's move on. Yes. Thank you guys. Let's see the financial statement, because the financial statement again, the financial statement, these are the common item that we go through from the these are the financial statement. We already familiar with that because these are the part of the reporting of the IFRS. There will be asset, non-current asset, property, plant, intangible asset, financial asset. All this financial asset would be as per the applicable IFRS. All this reporting would be as per IFRS. Mostly people was earlier also participating saying, and even the market is many. We are receiving the inquiry from the clients and as well as from the other our same profession background we are discussing. So they are also mentioning the common queries are coming. What to do with bad debts? What to do with the expenses? Here we already mentioned all the financial reporting. Please follow the accounting IFRS. You prepare your financial statement as per IFRS. As of now, there is no separate guideline. The word is used only the IFRS for the preparation of the financial statement. Now, after that, there is a couple of adjustments that we're gonna see that what are the adjustments. That the additional factor once you prepare the financial statement or the tax team will get the financial from the reporting team. Let's see the next part. Again, this is the further continue on the same. Now the liabilities side of the balance sheet, equity, retained earning. See here, if you've seen that even the authorities, FTA in the return, they saying total number of employees as part of reporting, we have to mention how many employees of the company. Because based on the analytic analysis, they will see whether the return submitted have the appropriate or no. Because there are different analytic tools they will use. So based on that, they are getting the information in the way that in the template they required. Backend, they have their own analysis team. From that analysis team, from that analysis of each entity, they will see, okay, they might send you the audit ticket or not send the audit ticket because they will go on sample base. Sample they will take from their initial analysis. Let's move to the next part. Okay, now we already seen the first part, the accounting schedule that is we already seen. Now question is there from the retention in the corporate tax that we will discuss on that. Please be with me because we will go as a random, then it will not be appropriate and uncomprehensive understanding for all the participants. But once the topic is coming for that, yes, your question in my mind, I will answer on that. And most of the question, even you are not raising, we already have from the client queries and already we receive from our participant also. Now here we're gonna discuss the adjustment. Because from the reporting team, we already taken the accounting schedule that we already seen what are the information is there. So now once we receive this information, what are the accounting adjustment and exempt income that will adjust in the profit. So this is the our now again from the return, I'm taking this information and I'm sharing with you guys to have the better understanding. We will not go in detailed discussion as of now because once you finish all the training session, you will able to understand all this written requirement, how to fulfill, how to prepare yourself. But as of today, we are taking the overview to understand why we are understanding or investing our time, why we should learn such area to give the comprehensive understanding. So this is the part I added from the corporate tax return. Accounting adjustment. What are the adjustment we needed to make in the accounting profit to reach to the taxable profit? One part accounting adjustment. Second part is the exempt income. So let's keep here the accounting adjustment. Accounting, we will start from accounting income, then realization basis adjustment, transitional adjustment, exempt income. These are the key areas from the income we will adjust over there. Maybe realization basis, as already mentioned, unrealized gain and losses basis that we will see. Transitional, we're not going through as of now. Exempt, we already seen in the first session what are the exempt income, but for sure in detail we will go dive into that topic also. So as of now, we are on this stage and we're going to see the other part of the adjustment for our understanding why we spending investing our time on that. Let's move on the next part because this will be more interesting and the better opportunity for the job seeker also that is currently landed in the UAE from even they have home country experience, they can learn the corporate tax and they will increase the chances of the selection. Accounting adjustment, accounting income for the tax period. So here the FTA will take the accounting income. What are the income? Then he will ask the next question, realize any capital gain and losses. So based on each area, what are the question and what are the additional information? First, we have to first we have to prepare our mind. What are the key area or topic and where it will be integrated, where it will be linked. So first we've seen the realize any capital gain and losses. One important part currently, and we don't have any separate capital gain tax in UAE. It will be same fall under the corporate tax. In other jurisdiction like UK and Europe, they have the capital gain tax. That tax is a more complicated, so they have different inside the corporate tax. They have the different taxation also. But as of now, all the income generated from the business activity or the activity that is fall under the business category, it will be fall under the corporate tax. Then for the that is a 9% except the M&E. Now the next question will be appear, does the taxable person account for any investment under equity method of accounting? Here the important part, the equity method of accounting. Why is the important? So this is again, what is the equity method? Equity method as per IFR, we already familiar what is the equity method and why is it required. We're gonna see that. If even you need the refresher, this concept, you note down this point and you spend some time online, you can search the data and you can go understand. Because this will, why such area, such outline, if you are prepared yourself, then once we're diving in the topic, you will have better understanding what we are discussing.